Hello guys, this is my trading journal for Friday the 9th of April. The equity markets today was a story of two parts, but you couldn't tell that by just looking at the heat map with its calm and comforting green spread across the screen. So the street was expecting some economic data before the market opened, and the futures were trading downwards in anticipation of the news. The March PPI numbers, the producer price index, were due to be reported just before the market opened, and the street was expecting a rise of about 50 basis points or 0.5% for the March reading. Well, the actual number came in as an increase of 1% for March. And after the numbers came out, the equity futures turned red and traded down going into the market open. However, as you can see from the heat map, during the trading session, the indices managed to turn the market around and all the indices closed higher in the green. And that's why we have this lovely spread of green across the screen. But in the open, there was a lot of red. The volatility index, on the other hand, continues to slide, and it's now consolidating below the 20 level. It was down about 1.5% today to close at 1669. And that is suggesting that the fear premium baked into the market over the last 12 months has now been taken down a few pegs. And the VIX is reflecting, in quotes, a calm market environment. But we shall see how long this calm market environment persists. In terms of trade ideas, I had no new trade ideas today. The regular April contracts now has 7 days to expire, and the May contract has 42 days until it expires. The combination of the earnings season kicking off and the sudden drop in the VIX means that there are not going to be as many underliers currently to sell spreads on. However, the picture changes daily. It's not a static thing. So there may be no trade ideas today or no viable candidates to sell spreads on, and tomorrow there might be 5. But that's how it plays out. Moving on to my open positions. As I have mentioned previously, I do not get elated when my P&L suddenly flashes green. Neither do I get deflated when the performance of my positions is on a downturn, so when my P&L goes red. The performance of my positions during the holding period is totally irrelevant. And as a result, I remain flatlined, if you like. I tend not to count my chickens until they hatch. The only P&L that really matters is the one on the day the position is closed. Everything else, as far as I'm concerned, is noise. Unless you're closing the position on that day, it's kind of irrelevant. So what really matters is the P&L on the day you close the position. So that said, I now have 2 open positions in the regular April contracts. The first one is in GNOG, this one here. Sold the 17.5, 12.5 put spread for a credit of $1.50. Let's see where GNOG closed today. So GNOG closed at 16.34 today, down about 72 cents. Implied volatility is 40. In terms of the P&L, the P&L is now positive $5 per contract. So that's gone from a negative $200 per contract last week to positive $5 per contract this week. My short 17.5 put is slightly in the money, but the strike still has some time value baked into it, which explains why the P&L is positive even though my short strike is slightly in the money. It's to do with the extrinsic value in the options. In terms of the price action, let me find the chart. So this is a chart of GNOG, a 2-year chart, and it remains encouraging in spite of the stock being down today, and here's why. Yesterday, I'll zoom into it, yesterday saw the bulls step up after an upgrade and some more positive news on the stock. So this is yesterday's candle here, this green one. And yesterday's volume pushed up the stock by, sorry, let me rewind. So yeah, this is yesterday's candle. Opened here, went all the way here, and then managed to close it around the top. There's a tiny bit of wick on it. Today's candle is an inside bar. So this is today. It came down a bit, but as you can see, it is entirely contained within yesterday's candle. Another thing is the volume. The volume that pushed this thing higher is above average, slightly above average, and significantly it's higher than today's volume that pushed it down, but still contained within where the buyers came in. So the sellers are operating within the range that was bought yesterday, and they're doing so on lower volume. I'm happy to take this thing into the expiry week, given the time value in the options, and at the moment, no action is required on this one. I don't see myself taking any action until I close this thing out next week. So no action required on this one. The price action is quite encouraging in spite of it being down today. Lovely green candle here. Lovely uptick in volume. Today was a non-event as far as the buyers were concerned, but the sellers were contained within this range where the buyers bought it yesterday. Next week we shall see what happens. Moving on to my second position. My second position is in blue, BLUE. On this one I sold a 30-25 put spread for a credit of $1.90. Let's see where BLUE closed. So BLUE closed at $28.16. It was down about 71 cents today. Implied volatility 22.62. In terms of P&L, it's currently a P&L of negative $3 per contract. This one here. And the P&L has gone from a positive $47 last week to negative $3 this week, and that is based on the delta movement in the stock. My short 30 put is currently in the money. However, in terms of the price action, blue is still consolidating at the bottom of its 2-year range, and within that bottom range is another micro range. Let me get the chart. So this is a 2-year chart of BLUE, and I would say here, and then you got this range here, and then you got this tiny one here, which I'm going to zoom into. So here is that's the bottom of this micro range within the massive one. The 30 level continues to act as a magnet for the stock. It's currently testing the bottom of this range. And with earnings out in about 2 weeks, my expectation is that the buyers will continue to passively accumulate the stock without pushing it up too much before earnings. You can see the volume has dropped off here. Volume has totally dropped off, and this is typical of an accumulation at the bottom before it moves to the upside. The buyers are not being too aggressive. They don't want to move the price up. However, this 30 level here has got a lot of congestion, and given the options still have time value in them, I'm happy to hold this thing into the expiry week. No action required. The 30 level will come through, hopefully, but no action is required on this one for now. And the third one, TAN, even though my position in this is closed, I am fully aware that many people didn't get closed in this position, so I'm going to look into it, or I'm going to treat it as if I had an open position. So on this one, sold the 80.75 put spread in the weekly option, the 30th of April option. Let's see where TAN closed. So TAN closed at 86.46, down 41 cents. Implied volatility is 21.2. The stock went as high as $93 last week. I think it touched about 93 and change, and that's when I got filled. And then he pulled back a bit. The short 80 put strike is still out of the money by about $6. And going into next week with a premium as high as it is, it should be marked down, all things being equal. Let me find out where it's currently being marked, because I haven't got a position in it. So we sold, it was the weekly contract, April 30, this one here, 80.75. So it's currently being marked at 87 cents. The target to buy it back is 60 cents, which is 27 cents away from where it is at the moment. So that's very achievable, given we've got 7 days left, all things being equal, i.e. if this thing just remains at 86 on Monday, this 87 should come down. I don't know what the theta is in this, but it should come down a bit, and if there's an uptick in the stock, it should come down some more. No action required if you're still holding this position. It is doing very well. It's not, the short strike is not in the money. Theta decay should do its thing. And let me just pull up a chart of 10. So this is a chart of 10. This here is a high of 94.24. So this was the day I luckily got filled, and since then it's come back down. But worst case scenario, even if it comes down to around here, this is still 81. So there's some support around here, and this is the 81 level. So even if it comes down to around here, the premium should be eroded, given that they're only 7 days. So if I was holding this position, I wouldn't do anything. No actions required on this one. And that takes me onto my watch list. And my watch list is totally empty. I haven't got anything on my watch list for today. I did have something a day before yesterday, but the volatility on that dropped. I've been watching a couple of stocks trying to put a trade idea on, but the volatility just dropped. IV dropped in those stocks, so they've come off my list. And that brings me to the end of my journal today. A quick takeaway from today's journal: earnings season kicking off, and the sudden drop in VIX has reduced the pool of available underliers to sell spreads on. I'm still on the hunt for trade ideas for May, so keep an eye out for the trade ideas alerts. In terms of open positions, GNOG, no action required. BLUE, no action required. TAN, no action required. Have a fantastic weekend, everyone, and see you next week. Thank you and goodbye.